Welcome. Today, we're diving into a topic that's on everyone's mind: how to double your money legally and safely. Whether you're just starting your financial journey or looking to boost your savings, understanding the right strategies is crucial. We'll explore proven methods, discuss the risks, and highlight the importance of patience and discipline. Let's set the stage for a journey toward financial growth, focusing on practical steps and real-world examples. By the end of this video, you'll have a clear roadmap to help you make smarter, safer decisions with your hard-earned money. Let's get started. One of the simplest ways to estimate how long it will take to double your money is the rule of 72. This rule states that you divide 72 by your annual rate of return to get the number of years it will take for your investment to double. For example, if you earn a 6% return each year, it will take about 12 years to double your money. This quick calculation helps you set realistic expectations and plan your investments accordingly. Understanding this rule is a great first step in your journey to financial growth. Compound interest is often called the eighth wonder of the world. It's the process where your money earns interest, and then that interest earns more interest. Over time, this snowball effect can significantly grow your wealth. By reinvesting your earnings, you allow your money to work for you, accelerating the path to doubling your investment. The earlier you start, the more powerful compounding becomes, making it a cornerstone of safe and legal wealth building. A high-interest savings account is one of the safest places to grow your money. While the returns may not be as high as other investments, your principal is protected, and you earn steady interest over time. These accounts are ideal for those who prioritize safety and liquidity. By consistently depositing money and letting interest accumulate, you can gradually work toward doubling your savings without taking on unnecessary risk. Certificates of deposit, or CDs, are another safe way to grow your money. When you invest in a CD, you agree to lock your money away for a set period in exchange for a higher interest rate than a regular savings account. While your funds aren't as liquid, the guaranteed return makes CDs a reliable option for those who want to double their money over time without exposure to market volatility. Government bonds are considered one of the safest investments available. By lending money to the government, you receive regular interest payments and your principal back at maturity. While the returns are typically modest, the safety and predictability make bonds a solid choice for conservative investors aiming to double their money over a longer period. Investing in the stock market offers higher potential returns, but also comes with greater risk. By purchasing shares in companies, you become a part owner and can benefit from their growth. Historically, the stock market has doubled investors' money over time, especially when investing in broad market index funds. However, it's important to diversify and avoid putting all your eggs in one basket. Index funds and ETFs are popular investment vehicles for those seeking to double their money safely. These funds track a broad market index, spreading your risk across many companies. They offer low fees, transparency, and historically strong returns. By investing regularly and holding for the long term, you can harness the power of the market while minimizing individual stock risk. Dividend-paying stocks provide a steady stream of income in addition to potential price appreciation. By reinvesting dividends, you can accelerate the compounding effect and reach your goal of doubling your money faster. Look for companies with a strong history of consistent dividend payments and solid financials to reduce risk. Real estate is a time-tested way to build wealth and potentially double your money. Whether through rental income, property appreciation, or real estate investment trusts, REITs, there are multiple avenues to grow your capital. Real estate does require more upfront capital and research, but it offers tangible assets and potential tax benefits. Peer-to-peer lending platforms connect borrowers with individual investors. By lending your money to vetted borrowers, you can earn higher interest rates than traditional savings accounts. However, it's important to assess the risk of borrower default and diversify your loans across multiple borrowers to protect your investment. Robo-advisors use algorithms to manage your investments automatically. They offer diversified portfolios, low fees, and require minimal effort from you. By consistently contributing and letting the robo-advisor rebalance your portfolio, you can steadily work toward doubling your money with less stress and emotion involved. If your employer offers a 401(k) match, take full advantage of it. This is essentially free money that can help you double your contributions instantly. By contributing enough to get the full match, you maximize your retirement savings and accelerate your path to doubling your money, all within a legal and safe framework. Sometimes, the fastest way to double your money is to earn more of it. Starting a side hustle, like freelancing, consulting, or selling products online, can generate extra income that you can invest. By channeling your side hustle earnings into safe investment vehicles, you can reach your financial goals much faster. Doubling your money isn't just about earning more, it's also about saving more. By cutting unnecessary expenses and living below your means, you free up more money to invest. Small changes, like cooking at home or canceling unused subscriptions, can add up over time and help you reach your financial targets sooner. It's important to remember that if something sounds too good to be true, it probably is. Avoid get-rich-quick schemes and unregulated investments that promise to double your money overnight. Stick to legal, transparent, and proven methods to protect your hard-earned cash from fraud and loss. Every investment comes with its own balance of risk and reward. Safer options like savings accounts and bonds offer lower returns, while stocks and real estate can yield higher gains but with more volatility. Understanding your risk tolerance is key to choosing the right path to double your money safely and legally. Diversification means spreading your investments across different asset classes to reduce risk. By not putting all your eggs in one basket, you protect yourself from major losses if one investment performs poorly. A well-diversified portfolio is a cornerstone of safe and legal wealth building. Doubling your money doesn't happen overnight. Patience is essential. By staying committed to your investment plan and resisting the urge to chase quick wins, you allow time and compounding to work in your favor. Remember, slow and steady often wins the race when it comes to building wealth safely. Reinvesting your returns is a powerful way to accelerate your path to doubling your money. Instead of spending the interest or dividends you earn, put them back into your investment. This boosts the compounding effect and helps your wealth grow faster over time. Having clear, realistic financial goals helps you stay focused and motivated. Decide how much you want to double, by when, and what steps you'll take to get there. Writing down your goals and tracking your progress makes it easier to stay on course and make adjustments as needed. Before you start investing aggressively, make sure you have an emergency fund. This safety net protects you from unexpected expenses and prevents you from dipping into your investments prematurely. Aim for at least 3 to 6 months' worth of living expenses in a liquid, easily accessible account. Automating your investments ensures you consistently contribute to your financial goals. Set up automatic transfers to your investment accounts so you never miss a contribution. This hands-off approach removes emotion from the process and keeps you on track to doubling your money over time. Using tax-advantaged accounts like IRAs, 401(k)s, or HSAs can help your money grow faster by reducing your tax burden. These accounts offer tax-deferred or tax-free growth, allowing you to keep more of your returns and reach your goal of doubling your money more efficiently. The financial world is always changing, so it's important to keep learning. Stay updated on new investment opportunities, market trends, and personal finance strategies. The more you know, the better equipped you'll be to make smart, legal, and safe decisions on your journey to doubling your money. Emotions can lead to poor financial decisions, especially during market ups and downs. Stick to your plan, avoid panic selling, and don't let fear or greed dictate your actions. Staying rational and disciplined is key to safely doubling your money over time. Regularly reviewing your investment portfolio helps ensure you're on track to meet your goals. Rebalance your assets as needed to maintain your desired risk level and take advantage of new opportunities. This proactive approach keeps your plan aligned with your goal of doubling your money. If you're unsure where to start or how to optimize your investments, consider consulting a financial advisor. Professionals can help you create a personalized plan, avoid costly mistakes, and stay on the right side of the law as you work toward doubling your money. Investment fees can eat into your returns and slow your progress toward doubling your money. Always be aware of the fees associated with your accounts, funds, or advisors. Choosing low-cost investment options helps you keep more of your earnings and reach your goals faster. Inflation erodes the purchasing power of your money over time. To truly double your wealth, your investments need to outpace inflation. Focus on assets that offer returns above the inflation rate, such as stocks, real estate, or inflation-protected securities. Always ensure your investment activities comply with local laws and regulations. Avoid unregistered securities, insider trading, or tax evasion. Staying on the right side of the law not only protects your money, but also your reputation and peace of mind. Insurance can protect your wealth from unexpected events like illness, accidents, or property loss. Having adequate coverage ensures that you don't have to dip into your investments or savings, keeping your plan to double your money on track. Markets go through cycles of growth and decline. Understanding these cycles helps you make better investment decisions and avoid panic during downturns. By staying invested and focusing on the long term, you increase your chances of doubling your money safely. Dollar-cost averaging involves investing a fixed amount of money at regular intervals, regardless of market conditions. This strategy reduces the impact of market volatility and can help you accumulate wealth steadily, bringing you closer to doubling your money over time. Time is one of the most powerful tools in investing. The longer your money stays invested, the more it can grow through compounding and market appreciation. Start as early as possible to give your investments the best chance to double and beyond. Using borrowed money or leverage can amplify gains but also increases risk significantly. For most people seeking to double their money safely, it's best to avoid high leverage and stick to investments you fully understand and can afford. Regularly tracking your progress keeps you motivated and helps you spot areas for improvement. Use simple spreadsheets or financial apps to monitor your investments, savings, and overall net worth as you work toward doubling your money. Reaching financial milestones, like doubling your money, is worth celebrating. Recognize your achievements, no matter how small, and use them as motivation to keep going. Each step forward brings you closer to your ultimate financial goals. Everyone makes mistakes on their financial journey. The key is to learn from them and adjust your strategy. Reflect on what went wrong, seek advice if needed, and use setbacks as stepping stones toward doubling your money safely and legally. Consistency is the secret ingredient to financial success. By making regular contributions, sticking to your plan, and avoiding impulsive decisions, you set yourself up for steady progress. Over time, these habits compound, helping you double your money the right way. Fear of missing out, or FOMO, can lead to risky investments and poor decisions. Stay focused on your own goals and avoid chasing trends just because others are. Remember, slow and steady wins the race when it comes to doubling your money safely. Let's visualize how compound interest helps you double your money. Imagine starting with a small amount, and each year, your interest earns more interest. Over time, the growth accelerates, showing the true power of compounding. This schematic will help you see why patience and consistency are so important in wealth building. Now, let's see how the rule of 72 works in practice. This simple formula helps you estimate how long it will take to double your money at a given interest rate. The schematic will show the calculation and how different rates affect the doubling time, making it easy to plan your investments. Let's recap the key concepts we've covered: compound interest, the rule of 72, diversification, patience, and the importance of legal, safe strategies. Mastering these principles will set you on the right path to doubling your money without unnecessary risk. Keep these concepts in mind as you move forward. Congratulations! You now have a toolkit of legal and safe strategies to double your money. Remember, the journey requires patience, discipline, and a willingness to keep learning. Start applying these principles today and watch your wealth grow over time. Your financial future is in your hands. Make it a bright one.